What's going on, guys? It's Goose from the Wise Wealth Discord coming back at you with a little watch list. It is obviously Monday, not Sunday. We had the market off. It was MLK Day on Monday, or it is Tuesday, not Monday or Sunday. Usually I do get them out Monday night, but I got a little bit busy and sidetracked, and I just wasn't able to get it out. Thank you for understanding. I'm gonna go through you guys some of the setups that I'm seeing. Um, I did switch to a bearish position. I had some bearish thesis behind it. Where did I put it? Over here. Starting to become cautiously bullish. I'm seeing a larger time frame of some bearish divergences on the daily and 4 hour. Seasonality chart for SPY shows midway through January make a lower low before the start of February. Escalation in the Middle East. There was more. It was Honduras or Hiristas or something like that. I forgot what their group was, but it's basically an Iran backed group that had shot missiles at a U.S. cargo ship in the Red Sea. That is actually happening. That was reported yesterday, I believe. But escalation in the Middle East and the supply chain issues in the Red Sea. That's like kind of the cargo ship and them not wanting them to get through. There's some companies that are opting not to ship through the Red Sea right now because of risk of their supply. We also have some debt limit talks. I believe that's by the end of the month. That's nothing like too concerning right now. And then the fear and greed index. You look at the fear and greed index, and we were in extreme fear for a while, and then we ended up going all the way up to extreme greed. And it's like when you see those things, it's usually kind of like the psychological impact of, you know, the stock market. When you're in extreme fear, you're going to see a lot of selling. But people know that when you're in fearful situations, those are the dips you want to be buying. And then when you get in extreme greed, which we were in the start of the year, right now we tone it down a little bit because we're kind of consolidating. um, when you're in extreme greed, those are when you want to. That's when you want to be selling. So like that's kind of like it's something you could add to the piece of the puzzle. You don't want to see extreme greed and back. Oh, it's going to go to extreme fear. You see extreme fear and it's going to go to extreme greed. It's not an indicator for tops and bottoms, but it gives you an idea on where everyone's at, and if the trade is getting a little too crowded and stuff, you could start to see that in how greedy we are. So with what I'm seeing is, so the divergence I'm seeing right now on the 4 hour that I was talking about is this. These candlesticks are showing an uptrend. A higher high, higher low. I mean, right here it did break a lower low, but right here, this whole time it's kind of genuinely going up. The RSI is coming down, and it's like that's what and divergence is. It's showing that the trend is weakening or the trend could be reversing soon. And when I say it could be, that like these can go on for weeks or months, divergences. It could be diverged for months or weeks. So it's also not like a topping or like a call for the top. But I did switch cautiously bearish just because of seasonality. I can show you that S&P 500 seasonality chart. So we pull this up, and on most of them, they're all kind of different. You see that. Um, oh, this is really blurry. Holy crap! Let's see what this looks like. Oh, here, that's a lot better. So January, about mid to early January, you see kind of a topping pattern, and then you see it make that lower low, lower high, lower low. It's like this isn't also like just one thing you want to pay attention to. That's why I'm giving you the Red Sea information and the fear and greed index, and then you look at seasonality, and typically we start to sell off. So that's kind of why I started becoming cautiously bullish. The reason I still put bullish in the thesis is because you can't deny that this is in a bullish structure right now. I mean, that's an uptrend. Until some of these levels are broken, you don't usually want to get in a trade. I did mention that in the fact that I did. kind of mess up. I said I was realizing with my recent call and switch to bearish position, I really am risking more than I need to. Patience, react, don't predict. That's typically how you want to play the market. Is it's a reactionary thing. It's not something you want to predict. So like with a lot of the things I put up there, it's me predicting that things will come down. And I still am in the position. I did enter shorts on Friday, and like pre-market is down. So I mean, maybe the thesis does play out, but typically, if you wanted to give yourself a better edge, you would want to wait until some of these levels are broken to confirm that we are going in a downtrend. The divergence was just too big for me. You have declining volume as you're kind of like moving up here, and the biggest volume bar that we had was a sell day. So that was kind of concerning too. It's just kind of like from here, it's been declining volume. It hasn't really got up to this point again. But I mean, we're consolidating, so it's like you can't really, turn ultra bearish. But there's a lot of things that like I kind of put, the fear and greed, the Red Sea, the divergence on the price action chart, or yeah, price action. And when you see those things, I mean, that kind of gives me the idea that I could get in shorts and have a pretty good RR, based off um, where we're at on the charts. Obviously, all-time highs is right here at 480.02. It looks like to the penny, maybe 480. So we're not very far off. I mean, we go from Friday's close right here to 480. I think it's like maybe 0.75. Yeah, right there it'd be like 0.71. So it's like we're not very far off. All we need is like a percent day to touch it, which I still think is possible potentially, but there's a lot of things that are just starting to seem a little bit bearish. I know Jimmy had mentioned some of the famous hedge funds or institutions that like get in a little too late or start to get ultra bullish. So that's usually when they start to possibly pull the rug. For as far as economic data, I don't know if we have much. I think there's a Fed speaker and then some job numbers at the end of the year or end of the week. So what we got? Monday it was holiday. Tuesday Empire State Manufacturing. That should already or that comes out in 20 minutes, 6:30. Um, yeah, Fed Governor Christopher Waller speaks. Wednesday, we have import prices, retail sales. Retail sales will be kind of a big one, I would assume, because everyone's expecting recession or a soft landing. So that kind of gives us an idea on how good retailers are hanging in there. Two more Fed speakers: Michael Barr, Michelle Bowman. Industrial production, that's been kind of in the dump. A lot of our sectors like that are just not really doing very great. So that could already be priced in. And then another New York Fed President John Williams delivers opening remarks. So we do have a lot of Fed speakers this week. Initial jobless claims was the one that will be a big one. Everyone's looking at job numbers, housing starts, stuff like that. Consumer sentiment that sometimes moves the market, but you have 1, 2, 3, 4, 5, 6, 7, 8. So you have 8 Fed speakers this week, so that can cause a lot of volatility too, depending on some of their remarks and their language. But yeah, right now, I mean, this is a 4 hour. Let me go to the 15. This is breaking down in pre-market. You had a little flag that was going. I thought this could potentially be, a support here. And if this is broken, comes up, retest, fills the gap or something, the gap would be all the way up here, but there would be some decent price action here to kind of invalidate, having to fill the whole gap. Possible Head and Shoulders. Jimmy had mentioned that this is one of the one patterns that don't play out, typically as well as people would like them to be. So that's kind of how I'm looking at it. You obviously would need a break below this neckline right here. That's kind of where you can turn ultra bullish if we get below the 468 level. But I could definitely see us coming and testing that this week with all the kind of the things that I was showing you with divergences. So that's what I'm waiting on. I mean, I'm in a short position, so I can't sit, really say much. But this right here was the consolidation, and right now in pre-market we're broken below it. So we could see a test of 472 today, in my opinion. But who knows? It could be a ripper. Q, same thing. It has the same exact consolidation area. It did break out of this area right here, and what I thought this was a beautiful retest. It's like it retested here in the short term, and then it came back up and retested again, and it was a huge denial. And then there's either accumulation or distribution. Broken below it could be distribution. We could go for a lower low. And right now, I mean, realistically, that pump that we've had, since that breakout, it was just a lower high. And it's like it was a pretty big pump. I'm not gonna lie, we made a decent amount of money off some calls, but that could just be another lower high and then continue the downtrend if the head and shoulders plays out. IWM is definitely not looking the best right now. A lot of regional banks this week on earnings. That's going to be their catalyst. They're hoping, that the regional banks aren't falling apart, which the emergency funds are still being used. The Fed plans on stopping that around March, so that's when things could definitely get super ugly. That's why I'm kind of like it could, have one last push up to all-time highs, get everyone, baited in, with the all-time high narrative. But right now, it does look like just a healthy pullback. But there's definitely some big levels that need to be held, like this level right here. Seeing a lot of price action right here. So like right where they're at is a big level. If you don't get that bounce, then you could continue to fall lower and see, maybe the 188, 180 area somewhere in between here. That's small caps. The big things that I would like to see in my bearish position is the 30-year needs to stay above 4%. If it does come below 4%, that's typically where a lot of like price action happens. I was watching a YouTuber. I'm not really going to go back over it, but every time 4% is either touched or broken above, the market has had a big reactionary move. So that's my big level right now. It's consolidating. Same with the dollar. The dollar is breaking out today, which is concerning for bulls. Is you didn't want this to happen because it was either accumulation or distribution. You kind of wanted it to break back down. With it breaking above, I mean that's a pretty bullish structure, and the dollar going up isn't good for stocks in general. Apple, they had a downgrade this morning, so they're down 1.64%. Still find support around 181. Um, Still looking slightly bearish. I mean, I thought they would come up and maybe create that right shoulder. It's just not strong. And Apple has always been like the baby of all institutions, the most owned stock, which I personally think NVIDIA will be that here soon. Microsoft last week, we had a beautiful call out of the breakout. Still going up. It's almost up 1%. They're going to create a new all-time high at open, most likely, barring any crazy news or anything. And Microsoft, I think, is a good place for longs. If the market starts to show a tremendous amount of power and strength, and they do break above some of these consolidation levels, and they go towards all-time highs, Microsoft would be a good one. Another one would be Meta. They're in a strong uptrend right now. Nvidia. So it's like those are things that you want to play when you see strength in a weakening market. You see they're up, and the general market is down right now. That's showing strength. So if the market does turn around, Microsoft, Nvidia, Meta, those are some of the ones I'm looking for. AMD, I'm assuming they got some sort of news. I'm not sure why they're up 1.63%, but they're coming back. The resistance would be about 149, 150. They need to break above that for me to get bullish on them. Amazon, kind of the same difference. Is they started breaking above that 155, 156 area, but now they're right back in it. So until broken above convictedly and seeing the indexes go to shoot towards all-time highs, I'm not really bullish on many of them. Netflix could be a short-term kind of a head and shoulders, as you have the left shoulder right here, you have the head, and then you have the right shoulder. And it's like it's not beautiful, and head and shoulders don't always play out. But if broken below this trend line right here, then you can get really bearish and start to see maybe 420, 400 be tested. That's kind of the Tesla one. I mean, that's just such an ugly chart, man. We were trying to play this breakout right here, this shorter term breakout, and it broke out for sure. But I mean, it's just getting smoked from this ultimate trend line. Let me back it up a little bit. It's in a massive downtrend, and bulls just cannot get it over. There's a lot of bad news flowing in for it. It's down another percent in pre-market. My next level of support is around the 200 area. If that breaks, then you could start to see lots of downside where it starts coming back down to see this price action, maybe the 185, 160 area, 150. So I'm waiting for a little bit more bullish flow to come through. Um, it's just been in a constant downtrend, down, lower, high, down, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. So it's like it's in a downtrend right now. So this isn't where you want to be buying calls for Tesla, and that's another thing where it's like you could short Tesla on the down if the indexes still look weak, and then you can, if the indexes look strong, you can long Meta, Nvidia, Microsoft, the ones that are staying strong in the midst of a sell-off. That's it for the Mag 7. Coinbase was kind of a buy the rumor, sell the news. There was a huge rumor of the spot ETF being approved. It finally was, and then since then it's been sold off. I think part of the reason and what I'm speculating is because now there's like a safer avenue for people to invest in crypto. There's not a lot of avenues necessarily. And uh, Coinbase and Riot and some of them were like one of the few that were actually a decent avenue. But you could see right before the sell off is like another bearish divergence. So like from here up to here, it's showing lots of higher highs. But then on the RSI, it's showing that it's in a downtrend. So it's like as you can see, these can go on for a while. This was from December 4th all the way up to like the end of January. So the whole December it was divergence, 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 and it still was climbing. Same thing can happen with the SPY is the fact that you have that divergence happening, but it can continue to keep going. I mean, this was going since December 15th. But I like a three touch, and I also like it to be like in a longer time frame, like the 4 hour. IWM had one as well. You could see that they're creating higher highs and higher lows on this, but then right here in this RSI, they're going lower, and then it ended up selling off. And it's like those are just a piece to the puzzle. You don't want to play that specifically. But that's part of the reason I'm starting to get a little bit bearish. The VIX, someone put in, that's been a big thing that people were talking about is someone put in something worth premium of like $17 million on the VIX for a $17 call. So I don't know. My VIX is in here somewhere. I think I just passed it. I need to organize where I put everything because I can never find it. But someone put in a $17 call. It was at like 13 on Friday, so they're calling for like a 20 to 30% change by the middle of February, which I think is possible when you look at some of the tensions and stuff in the Middle East. I mean, it just takes one, good airstrike of any sort or invasion, and that can send the markets tumbling and send a lot of fear through the market. So I don't know. That's kind of how I'm looking at it. I know I just went over the Mag 7. I got to get ready for work, so I don't have a lot of time. Shopify, they've kind of been on like a decent divergence a little bit because they are creating higher highs. And there's that. Morgan Stanley came out and they did beat earnings, so that kind of gave them a little pump in pre-market. ARK is looking kind of weak. They broke below the support that I wanted them to see be held. So it's like with that, it looks like it was just a false breakout because it really needed to break above. It finally did, and then it got smoked. And it's like as you can see, the volume was right there, it's declining, and now on the sell side, it's starting to pick up again. So I don't know. I'm slightly becoming bearish on the market just because of all the things that I had mentioned, but it doesn't have to play out that way. If we go to futures, 4,800 obviously is a big level to hold. It broke below in overnight trading, but now they're getting a bounce and they're going to see if they can hold this as support, keep mounting on that. If that is lost, before pre-market, I could see, the SPY maybe having a 0.5% to 3/4, maybe 1% day. If that happens, we might be able to get some continuation because that'll bring us pretty close to here. QQQ, I didn't really go over them super much, but that's big tech. Still flagging, still kind of in this consolidation chop zone until below here, 404. We may not see 400 if it gets held up. But you guys kind of get the gist. I'm slightly bearish on it. I could be wrong. That's why I'm always got to be open to the fact that I'm not really playing a reactionary thing. I'm playing more of a prediction style. So if it does start to go against me, that's okay. Right now, I'm up about 13% on the short. So I'll probably be up close to like 20% on open with, something like that, maybe a half percent open. But that's about it for this week, guys. We'll see what happens. That's just kind of my prediction. Um, Nothing really new. I mean, we just have that economic data, a bunch of Fed speakers, and it is option expiration. It's VIX expiration, and typically these weeks and days after MLK, when option expiration happens, it's historically red. And those are just kind of some of the pieces to the puzzle. Is that a lot of things are turning bearish. You see the divergences. You hear about the Red Sea, and that's part of the reason I go short on the market. You guys always make your well informed decisions, do your own due diligence. I'm not a financial advisor by any means. So please do not take this for, the Bible. But that's what I'm looking at. Appreciate you guys tuning in today.